Hello friends, this is Saurabh Adva from Tax Accountant. Today I'd like to cover a video which is quite technical, and if you want to know this technical information, please watch this video till end so that you understand my concept and my understanding of this very technical concept on GST and subdivision of land. So these questions have been asked many times in last 6 months. Some of our clients, some of our people for calling us and trying to get our opinion on that. So this basically wasn't too important go back 3-4 years ago, but in last, as I said, as you know, if you understand Auckland property market, New Zealand property market, subdivision has been very hot topic because of intensification rules. Subdivision on land was permitted and a lot of people have done it. So when GST becomes applicable on subdivision of land, when do you have to pay it? What is the IRD point of view? What are the technical rules and law behind it? So stay with me and watch this video till end. I like to cover these topics in details. So IRD has issued its guidance, and these are the guidance. If you want to read, you can go and read yourself as well. QB 2404 FS1, QB 2404 issued in June 2024. These are the questions IRD has answered themselves as well. This was also discussed in Tax Information Bulletin, Volume 36. And the focus, when subdivision becomes a taxable activity for GST, that's the question they have answered on this as well. So what makes a subdivision a taxable activity? So the IRD point of view is this must be carried on in continuous or regular basis. This is assessed case by case basis. There are a number of factors involved in this, and the key factor is more lots is equal to more likely a taxable activity. One off project may still qualify at not being taxable activity. So what IRD point of view in this has been, if you are doing a subdivision, let's say got a piece of land and that piece is divided into multiple lots, 4 lots, 5 lots. So the more likely it will be taxable activity because number of lots being created are larger. If number of lot is a small, just one off, it may not qualify to that. It is sounds simple, but it's very complex. I'll show you more into these further slides. So always professional guidance is required. Even though you're watching this video, still take a professional guidance and support from someone who understands this concept very well, because these facts and intentions are very critical, and GST implication could be very significant amount on the purchase price. So case law, this has been a fundamental document in terms of taxable activity and understanding GST and subdivision. The case is called Newman versus EIR 1995. In this particular case, a builder subdivided land into 2 lots. He kept one, he ran into financial difficulty, and he sold the other one. So the court specifically said this is not a continuous or regular activity. That why it was not a taxable activity. Because this was not a taxable activity, he did not have to pay GST on that. So this approach has been the IRD view after this case. And prior to 1995, as I understand, the IRD view was always, you subdivide a land, this is a taxable activity, that's it. This is business, this is taxable activity. After Newman case, this approach was changed, and the Judge Richardson, he outlined very important and critical factors in outlining what is taxable activity and what is not a taxable activity. In Newman's specific case, the scale of subdivision, level of development, time and effort, initial investment, and commerciality of the transaction. So these were the relevant factors when it came out to be what is a taxable activity, what is not a taxable activity. You might be wondering why I'm referring to a word called taxable activity many times, because taxable activity is a very important term. If you have received a letter of review or anything from the IRD, they will be mentioning about taxable activity as well, which is outlined in section 6 of GST Act 1985. So this specific thing, a taxable activity, that determines that do you have to pay GST or you don't have to pay GST. So all the arguments of the court has always been, and IRD's case officers will always talk about taxable activity, whether something is a taxable activity or not. If it is, then you will have to pay tax. If it's not, then you don't have to pay GST on the sale of your land. So these were the relevant factors to discuss. A sale, scale of subdivision, how many you have done, that's a scale. Level, how much of work has been involved, how much of land development you have done, earthworks, installing power meter, water meter, public drainage, private drainage, what sort of development work on that land has been done, how much time and effort is involved by you in doing that, whether it's just getting those architects or planners to do the work on the papers or actual work has been done on this as well. How much money has been invested, so all those sort of stuff, and commerciality of this project. Is any commercial sense in doing all that or not? And this is section 6 of GST Act. You can read yourself as well. This is on legislation.govt.nz, the website. So this has been discussed. There has to be an activity, there has to be something going on, carried on continuous or regular basis, and supply of goods and services for consideration. Now, when you're talking about land will qualify for an activity, right? So you're doing something, so it's an activity, it will qualify under section 6. Supply of goods and services, land is goods and consideration is money, so it will qualify for number 1. And number 3, the court will always argue, and the IRD officer will argue, and you only have one argue point, which is this is carried on continuous or regular basis. So all the arguments will be around this point only. And so to discuss this, what is continuous or regular? Continuous has to be over time and uninterrupted, right? There has to be 2 words, over time and uninterrupted. Regular, uniform, repeated course of action, often difficult to determine in land sales. Because land sales is you might do one subdivision and it might take 3 years to do it. So whether it's continuous or regular or not. See, it's become very critical here. I have only done it once. I have never done it. My parents had their property. They gave it to me and they subdivided it. They kept 1 lot and sold the 3 lots. What is a taxable activity? It becomes very subjective and very critical. So another case law which IRD has referred many times, which is a Wakelin versus EIR case. In this specific case, this person subdivided the lots into 6 lots and it was sold over 3 years. He said this is not a taxable activity because this is not continuous or regular. I'm not doing it every day. I sold it over 3 years. So this is not. But High Court, I think, held the decision this is a taxable activity. Even though it's sold over 6 years, it's still the scale of lots are 6 lots. And because it's been sold on continuous basis, even though scattered over many years, it's still called continuous. So their implication of this was this is continuous. And it was held as a taxable activity and he had to pay tax on all those sales. A recent case law is case T62, very important. In this specific case, this person had no idea what happened, right? So he bought a piece of land and then he made 2 houses on that land, house A, house B. They started living in house A themselves, and house B, they sold it. All done, they got a letter from IRD hey, this is a taxable activity, you have to pay GST on both the sales. That person might have got frightened. Oh, how come? I had no idea what I have to do, da da da. And they also been told that this is also qualify for income tax as well. So you also have to pay income tax and GST. It's okay if you understand everything and you knew before engaging this into, but all of a sudden if you get this thing, then it can give you nightmare, and it can be very scary, to be honest. So this, what happened, they mentioned that this is a taxable activity, and you have to pay tax on that. And under CB 17 they have to CB 10 they have to pay income tax on that as well. However, they it went to tax council, and the tax council held that this is not a taxable activity. So IRD's own body, tax council, said that this is not a taxable activity, and then they said this is okay because this seems like a one-off approach. This person made one house, sold one house, so this could be qualify under one-off. So this is not continuous regular. So this was held as this is not a taxable activity, and CB 17 residential exclusion applied to overcome CB 10 of Income Tax Act 2007 as well. So this was done in this specific case. So remember one thing, if you're doing GST, whether it's a taxable activity or not, the income tax still apply. You cannot disregard the income tax, which is CB3 if you have a profit making purposes, CB6 intention to dispose, CB12 if development done within 10 years, CB13 which is specifically to subdivision, and bright line rules are also available to apply. So these sort of things from income tax side of things still apply, even though GST may not apply. So this is the example. This is the final part. I'm going to wrap up pretty quickly. So example, if this is the person, the IRD has given this example themselves. So person living 20 years, for 20 years, they're living in a one piece of land. They got, let's say, 800 square meter of land. 400 square meter they're living in it. Balance 400 square meter, they subdivided, pay for the water care, water meter and power meter, installing a driveway and things, and they put this section for sale, then they sold it. Would it be a taxable activity? The view is it will not be a taxable activity, as this seems to be a one-off job and this doesn't seems to be continuous job. So it will be not a taxable activity, so no need to register for GST and pay GST on the sale of this piece of land. Similar example, if this person got 800 square meter of land, they subdivided it into 5 lots and they live in one and sell the other 4, IRD view was this will be a taxable activity. Reason being, the lots are higher, scale of development is higher, so you got 4 lots instead of 1 lot, plus the time and effort involved and commerciality of this project, scale of development, number of lots. So all those factors will come in and their view will be, it will be taxable activity. Look, end of the day, this is just my view, what I think. What you think, you can write in the comments, or if you have any questions, feel free to reach out to us. Happy to answer. Thank you for watching this video. If you like this channel, please subscribe to our channel. Thank you.